you can still go back and watch that video, right? And I am now recording this one so that I can post that up and you can review the video for that one. Okay? All right. So let's just go ahead and take a look at this one. And, okay, let's go, guys. Let's get down to business here. Okay, so identify the account below. I'll wait because I'm not going to talk over you. Identify the account below that is classified as an asset. Assets have what? Have future economic benefit, right? So does account receivable have future economic benefit? Yes, it does. So the answer here is A, right? Accounts payable is a liability. Common stock is what? Stockholders' equity. Good. Unearned revenue is a liability. Good. And service revenue is, hello, revenue, right? Okay? Okay, good. Number 2. Identify the account below that is classified as an asset. Okay, again, unearned revenue is a liability. Account payable is a liability. Do supplies have future economic benefit? Yes, they do. So that's the answer, right? Common stock is stockholders' equity. Revenue is revenue. Chart of accounts. Did I say that that's one of the documents you need to know? Okay. Identify the account below that is classified as a liability. Cash. No, that's an asset. How about account payable? Yes. Salary expense is an expense. Common stock is stockholders' equity. Equipment is an asset. Good. Which of the following is not an asset? Cash, land, revenue. Revenue is not an asset. It is revenue. Sometimes I get students that say, why isn't revenue an asset? Because it's revenue. I don't know what else to tell you. Okay. All right, good. Number 5. A simple tool that is widely used in accounting to represent ledger accounts and to understand how debits and credits affect the account balance is called a T account. Do you see the T? I pity the fool that doesn't see the T. Okay. Never mind. You have to watch old TV shows to know what that means. Okay. There was a guy named Mr. T, and he'd always say, I pity the fool. Okay, so, okay, never mind. All right, number 6. Select the account below that normally has a credit balance. Now, the normal balance in an account is the balance that it generally increases it. The normal balance in an account is the debit or credit that increases it. Okay, so is cash increased by a credit? Cash is increased by debit, so its normal balance is not a credit. Its normal balance is what? Debit, right? Because debits increase it. Office equipment is an asset. Do we increase that with a credit? No, we increase it with a debit. How about wages payable? Wages payable is a liability. We increase that with a credit, so it should have a normal balance of a credit, right? Dividends, we increase those with a debit. Expenses, we increase those with a debit. Okay, so that's something that's in the Chapter 2 slides that I guess I've lied a little bit about it only being 9 documents and that theoretically normal balances would be something that is not discussed in those, but it is back in the slide somewhere with the normal balances. Yes, sir. Repeat what about number 6? The normal balance of an account is the amount. When we say a normal balance will either be a debit or a credit balance. Okay, and the normal balance is the one that increases it. So since credits increase salaries payable, then its normal balance is a credit. The rest of these up here are increased by debits, so their normal balance would be a debit because that's what increases them. Okay? Okay, good. The process of transferring general journal entries information to the ledger is called posting, No. Double entry is the system that we use to record the debits and credits, right? But remember, we entered our debits and credits in a journal, and then we did what? Remember, I did this thing, and did this silly thing, and I walked over here, and I said we post them to the ledger, right? Year 1, year 2 example. You really should go through the video of the year 1, year 2 example if you don't know what I'm talking about right now. And I did that twice. I went through the year 1, year 2 example 2 times in here. And I kept saying, we enter entries in the journal, we post them to the ledger, right? Okay? Okay, good. Item 8, a general journal is, and it's what? It was the complete record of all the transactions, and we listed them in chronological order, didn't we? First, we put some cash into the company. So we debited cash, we credited common stock. That was in the journal. Then we posted a ledger, right? Then, I forget what happened next. Did we buy some equipment, or we bought a building or something? Is that what was next? Then we bought a building, didn't we? So the next thing was we debited building, we credited the cash for the $1 million, we credited the mortgage payable for $200. We put that in the journal, then we went and posted it to the ledger, right? Third thing was, I think we got the equipment, the van or whatever, the vehicle. So we debited equipment, we credited vehicle payable, and then we posted it. But that left side, if you were looking at the year 1, year 2 example, that left side was the journal, wasn't it? We entered transactions as they happen chronologically in the journal. We post them to the ledger, don't we? Hello? Yes. Year 1, year 2 example? I'm telling you guys, you're going to keep ignoring that example, and you're going to run into questions like this, and you're going to go, what happened? If you've ever spent any time at all spend it with that year 1, year 2 example, there's a blank version of it up there. In fact, I think I got iLearn open. Under Chapter 2, you've got the example, which is what I handed out to you. You've got it marked up. Marked up in case your hand was tired that day and you didn't write down everything that I asked you to. It's in there written down. You should have written it down that day, but if you didn't, it's there. Okay, that's the marked up version. I don't know why I enable editing. Well, might as well now that I'm in it. We enter transactions in the journal chronologically as they happen. And we do what? We post to the ledger. That's that over here. Okay. Now, and I wrote in all the financial statements here. Now, the other thing that's up here pay attention. The other thing that's up here, I had the discussion with you guys last time. If you can't sit next to a person and not whisper sweet nothings into their ear, then don't sit next to them. Okay, you take a look at Chapter 2. Nowhere on the exam is there going to be a question, what did so-and-so next to you say to you while he was talking about something that was going to be on the exam? There's no questions like that. The blank version, or call it clean version, notice doesn't have any of the journal entries, doesn't have any of the posting, but you should be able to do that on your own, shouldn't you? If you can do that on your own, you're going to be in good shape for these questions, aren't you? Okay. Now, sometimes students will say, can you clear out year 2? And my answer is yes, and so can you. If you want that one cleared out, just clear it out. I'm not going to do both of them. This is just to show you that you can do that, and that's a good way to practice it, right? Okay? All right. Let's go back. Number 9, smiles. Using information, what should be our net income? If we want our net income, what statement should we prepare? Income statement. Good. What goes on the income statement? Good. Revenue minus expenses goes on the income statement. Do we have any revenue talked about here? Revenue is what? 7,000. Good. Do we have any expenses talked about here? We have salary expense. What's that? 7,000? No. What did I do? 500? Good. Do we have any other expenses? Utilities. 1,000. Revenue minus expenses is net income, isn't it? So how much is my net income? 5,500. So is it correct then that the net income for the period is 5,500? Assuming this thing will stop acting like a fool. 5,500. Okay. Year one, year two. All of the accounts are assets except expense is an expense, isn't it? And that confuses them. So they say, well, I thought supplies was an asset. Yeah, it is. And as the supplies expire, they become expense, don't they? Supplies expense. The record of all accounts and their balances is called the general ledger. We post to the ledger, and when we post to the ledger, we see all the accounts and their balances, don't we, in the ledger? Year one, year two. A debit is what? On the left-hand side of a T account? Debit on the left, credit on the right. T account. A debit is used to increase. What gets increased by a debit? Assets. Well, you could sit here and list every asset, but let's just talk generally. Asset, expenses, dividends. Prepaid insurance is another asset. Prepaid insurance is another asset, right? So we don't have to list every single asset, right? Okay. So let's take a look. Is a debit is used to increase a debit is used to increase all of the following except, it's a good idea to read the whole question. Is all the following except, is supplies an asset? So we would increase that with a debit, wouldn't we? So that's not one. Cash is an asset. We would increase that with a debit, right? Accounts payable is a liability. We don't increase that with a debit. We increase that with a credit, right? Therefore, C becomes the right answer because it is not increased with a debit. 14. An account balance is the difference between the total debits and the credits, including the beginning balance. You're probably getting tired of hearing this, and I don't care. Year one, year two, example. Beginning balance, the difference between the debits and the credits, give me the ending balance, doesn't it? We started with 117, we increased it by 120, we increased it by 40, we decreased it by 12. If you don't believe me, use your calculator. That gives you the ending balance, doesn't it? Right? Okay, good. Number 15, a debit is used to increase which of the following? In which of the following scenarios? To decrease an asset? No, to decrease an asset we credit it. To decrease an expense? To decrease an expense we credit it. An increase in revenue? No, we do what? We increase revenue with a credit, don't we? An increase in common stock? No, we increase common stock with a credit, right? The only one that is correct is we increase a dividend with a debit, don't we? Decrease it with a credit. Decrease it with a credit. That's what I said. Decrease it with a credit. Don't try and eyebrow me out of my accounting knowledge. No, if I say something wrong, I've been known. Can you believe it? I've been known to say something wrong like once or twice in my whole life. Okay. All right. Okay. Okay. Okay, good. A credit entry increases assets and expense? No, it decreases them. Is always a decrease? No, it can be an increase if we're talking about liability, right? Okay. Decreases assets and expense and increases liability, common stock, and revenue? Ding. That's exactly what credits do. I think we've had like 3 or 4 or 5 questions here now, all on one slide. Red and blue arrow slide. Did you scare the person away on the bus? Okay. If you want to get rid of somebody in your life, study accounting hard. They'll eventually won't be able to stand you anymore. Okay, and you'll get rid of them. Okay? All right. Just go up to him and say, hey, to increase an asset, you debit it. My ex-wife divorced me after I told her she was a liability. See? What's so funny? Okay, now you come over and you take a look, and we have what? We have Trimble Graphic Design receives $1,500 from a client billed in a previous month for services provided. Which of the following journal entries will Trimble Graphics Design make to record this transaction? Now let me ask you out of the gate. If you receive cash, does your cash increase? Yes. So do you have to debit cash? Okay, so we've got to look at the answers quickly here. A has a chance, B has a chance, C has no chance because we know we have to debit cash, don't we? E has no chance because we know we have to debit cash, don't we? Now, if we already provided the service, what we should have done at the time that we provided the service was debit accounts receivable for this $1,500, I guess, and credit the revenue, right? When we provided the service, because we take revenue when we provide the service. It says we had already provided the service in the previous month, so we should have set up a receivable taking the revenue at that time, right? And then in the next month when they pay us, we know we're going to debit cash. If somebody pays you, do they owe you money anymore? So AR is account receivable, so there's that debit. We now need to credit it, don't we, so that we show that that person doesn't owe me any money anymore? So that now has a balance of 0. Guys, I want that to be a balance of 0. So isn't it true that I should debit cash and credit accounts receivable? So A is the correct answer. I received cash, didn't I? I know I got to debit cash. When I got the service, when I did the service, I debited accounts receivable, right? Did I debit account receivable? When I did the service, took the revenue? That's the first transaction in year 2, in the year 1, year 2 example. We did the concert and it was $100,000. The guy said he'd pay us later. We debited account receivable $100,000. We credited revenue $100,000. Then later on, the dude paid me, I think it was $40,000 or something. When he paid me $40,000, I made this entry. I debited the cash. I credited the account receivable for $40,000, didn't I? Year 1, year 2 example. Well, in that case, it's year 2. Huh? Question? Number 18, Jay Smith, the sole stockholder, received a $100 dividend from Jay's limo service. What entry should Jay's limo service make? If you're paying a dividend, are your dividends increasing? If you're paying a dividend, your dividend increased for the period, didn't it? You need to show how much dividend you paid. So your dividends have gone up, haven't they? Okay, dividends work like expenses, except they're not on the income statement. They're reported directly on the statement of retained earnings. But they have the same effect as expenses have on retained earnings in that what? They're subtracted from my revenue. They reduce my net income. If my net income goes down, my retained earnings goes down, doesn't it? When I pay a dividend, I pull the plug out of the piggy bank's ass, and I take the money out of the piggy bank, don't I? So my retained earnings goes down? Okay. Okay, good. That ass comment was just in case you were sleeping. Everybody woke up when I said that. Why did he say ass? Okay. All right. So if I pay a dividend, am I taking cash out of the corporate accounts? So do I have to credit cash? Okay. So you look at the choices here, and this one has a credit to cash. This one does not have a credit to cash. This one does not have a credit to cash. This one does not have a credit to cash. This one does not have a credit to cash. I should get a message from the chair of the accounting department saying, John, never ask a question that easy again on the exam. You're polluting the accounting 100. You're watering it down. You're making it too easy. You have to what? You have to credit cash, don't you? If you're paying a dividend. And as we've said, you debit dividend to increase the dividend for the period, right? Number 19, company provided $12,000 consulting services and was immediately paid in cash. If you're paid in cash, should your cash be debited? So can A be correct? Can C be correct? Can D be correct? Can E be correct? If you study this stuff properly, you study year 1, year 2, you study the red and blue arrow star, you study the chart of accounts, you develop your instinct as much as you do your understanding of accounting, don't you? That's the level of reflex you need to be in this stuff. This is how you need to be in this stuff. Accounting, as I told you at the very beginning, is a piano class. You see the note, you press these keys on the piano, and it makes beautiful music. Okay? Debit cash, credit the revenue, right? Because I've earned the revenue. Number 20. On May 31st, the cash account of bottles are us. And a normal balance of $5,000. Oh. Forget this question. I should never put this question on here. I thought that they were asking me the ending balance and they were asking me the beginning balance. I will not make you jump through hoops backwards. I will not start with an ending balance and make you work backwards to give me what the beginning balance should have been. We're having enough trouble jumping through the hoops forward, right? This one asked me the beginning balance. I'm not doing that. Yes, sir.
I tried this question last night. Is there a right answer?
Yeah. You're going to make me work for it, huh? Okay. I didn't know I was going to have to actually earn my salary today. Okay. Okay. So I don't know the beginning balance, right? I do know what? I do know the ending balance. They tell me that the ending balance was how much?
5,000.
On May 31st, that's the end of the month, had a normal balance of 5,000. Right? And then during May, the account was debited for 12,200. Do you increase cash with a debit? So 12,200 is the add here, isn't it? And then they say that it had total credits of 11.5. Do you decrease an account with 11.5? Okay, so I would have decreased it with 11.5, right? Now, what you need to do here to answer this question is you need to sit here and you need to do a subtotal. I don't want that pen to be that thick. You need a subtotal here. So I'm going to put this subtotal in red. Okay, and what I would do is sit here and add these two together. So this is 5,000 plus 11,000. That gives me 16.5. Am I doing my math right? So before I applied my credits, this account must have got up to a balance of 16.5, right? Then I applied my credits, and that brought it down to the 5,000. Okay. Well, how did it go from 12.2 of adds to 16.5 total before the subtract? There must have been what? 4,300 in here as the beginning balance. I started with 43. I added 12. That brought me to 16.5. I subtracted 11.5. That's how I ended up with the ending balance of 5,000.
Could you have just done the 12,200 minus the 11,500 and then get that and then do 5,000 minus the...
I have no idea. That's not how I do it. If you get the answer that way, go for it. I don't know. I can sit here and there could be all kinds of craziness as to how. Okay. That's not how I do it. Okay.
I had to switch. I was starting off with the 5,000 in the beginning, but it was
Okay. Yeah, when I first looked at this problem, I thought they were asking me the ending balance, and so that would have been a fair game question. Here's the beginning, here's the debits, here's the credits, can you figure out the ending balance? And I thought that's what they were asking. Look, I don't pour over the question and go, I look at it like, okay, this looks like a half-assed good question, and I put it on there, and, and ended up not liking it. But that's how I would have answered it. And yeah, there's probably more than one way to get to this. This is how I do it. This is how I do every account, guys. If you notice, BASE is the same thing I showed you for retained earnings. If I'm ever asked to figure out what should be the balance in the account, I do it this way. And the reason I do it this way is because from teaching the CPA exam for years, CPA exam loves to ask you things upstream. It's too easy on the CPA exam to ask you the ending balance. Every CPA candidate can do that. It is harder to say, what must have been the ads? There was a fire, and they lost the records, and they don't know what the beginning balance was. And I tell my CPA candidates, you do not have time to sit there and do a set of T accounts to figure this thing out. On the CPA exam, they got a minute and a half per multiple choice question to work on. They are moving. They got 4 hours to work something like 90 multiple choice questions and 7 long problems. They don't have time to mess around with T accounts and all that. So that's why I always do it like this. Okay? Okay, good. Jackson Consulting, blah, blah. Net income. We already had this question, or almost the same thing, right? Revenue is how much? 20,000. Expenses, and they give us the same expenses even. Utilities, right? Utilities, what, 2,000? Huh? 2,000. And salaries are 12? Any more expenses? Nope. So my net income, did I just make an income statement? 16.8? Okay. Okay, good. Bologna, whatever. What are the assets? Okay, well, let's see. Is cash an asset? Okay. How about accounts receivable? Is account receivable an asset? So we got 20,000. Let me write that a little better. We've got 2,000. Any other assets? Prepaid insurance is an asset. Good. Supplies is an asset. Good. Any others? Retained earnings is not an asset. Retained earnings is stockholders' equity. We have 2 stockholders' equity accounts. We have what? Common stock and retained earnings, right? Okay, good. So I add all these guys up. Do I get the right answer, I hope? 24,900? Okay, good. Number 23. Any question on that one? Compare the list of accounts below and choose the list that contains only accounts that would be classified as an asset. Is accounts payable an asset? Is unearned revenue an asset? Is building an asset? Is prepaid insurance an asset? Is supplies expense an asset? No, it's an expense. Is cash an asset? Is prepaid insurance an asset? Is equipment an asset? Beautiful. You will at most get 5 choice multiple choice questions. So there may be an E on some of yours. because that's as far as the Scantron I showed you goes.
Oh, you mean answers for every question?
Choices is what I should say. Options, whatever. You may have 5, you'll have 4 or 5. Never more than that, because if you look at that Scantron, they don't give you any more room for any others. Okay? I don't use that. What do they call it? The Zeus form or whatever. The one that I use is called Skinny Green. Okay? Okay, good. Which financial statement reports an organization's financial position at a single point in time? Stop for a second. When we talked about your balance sheet, we said it was like your wallet, wasn't it? If they say how much cash you have, you look in your wallet and you see how much cash you have in that point in time, right? If I say how much money do you have, you don't say, you mean yesterday? No, I mean now. You look in your wallet and you see what's in there now, don't you? So the balance sheet is like your wallet, isn't it?
Yes.
Okay. So which financial statement gives you your financial position at a point in time? Just think of your wallet. My financial position at this point in time is the $100 that's in my wallet, whatever, right?
Yeah.
So that's the balance sheet. Joel Consulting received $3,000 from a customer for services provided. Joel's journal entry to record the transaction will be, and if we receive $3,000 cash, do we have to debit cash? So we can immediately get rid of A and E here. Right? And if we provide service, should we credit revenue? Right? Number 26, Richard Redden. The sole stockholder contributed $70,000 cash and $130 land in exchange for common stock to open a new business, RR Consulting. Which of the following journal entries should be used to record this transaction? Now, let me start out by asking you, is cash an asset? Yes. Is land an asset? Yes. If you bring it into a business, should those accounts increase? Yes. So do we have to, what? Debit. So do we have to debit cash and debit land? Yes. Okay, so there's no such thing, and that's why sometimes you guys would say, hey, debit assets, and I'd say, stop saying that. There is no account in which you debit assets. You debit specific and credit specific accounts, don't you? Yes. Okay, so would you debit cash? No. Okay, debit cash and land, 200,000. I don't know what that means. This is a stupid question, really. Debit what? Debit cash, 70. Debit land, 130. And if you issue stock in exchange for assets, does your common stock account have to go up? Huh? So you credit common stock? A law firm billed a client $1,800 for work performed in the current month. Which of the following journal entries will the firm make to record the transaction? Have we earned the fees? It says what? Law firm billed a client for work performed. If work performed, we've earned it, haven't we? Okay. And so we need to credit what? We need to credit the fees earned, don't we? Legal fee revenue, $1,800. Do we credit unearned? No. Do we credit unearned? Would we credit accounts receivable? Would we debit? Would we decrease our revenue? We're trying to increase it, aren't we? Would we have to credit revenue, don't we? Don't you have to credit revenue when you earn revenue? Is there any other question up there in which revenue is credited? Is there any other choice up there in which revenue is credited? And you debit accounts receivable because you haven't received the cash yet, right? That's why you're billing them? Larry Barr, what is the balance of cash? How are we going to work this? How do we work this? Beginning balance, the adds, the subtract, and they're asking me the ending balance, aren't they? I know we use that for retained earnings, but we can use it for any account, can't we? In this case, we're using cash. So what was the beginning balance? Well, the beginning balance was 0 because he just started the business. I see why you want to say that, but he just started the business, right? Then he did what? Then he put 40,000 cash in, didn't he? So that's going to be an add to the cash, 40,000. Then he did what? Then he purchased $70 of office supplies on credit. Is that going to reduce my cash? No. If it's on credit, that means you pulled out your credit card and what? They told you to pay them later? Yes. Is equipment cash? Is equipment cash? Is equipment cash? Then why do you want to add it to the cash account? Are you saying you don't know because you don't understand, or you don't know because you're saying, yeah, I don't know why I said that? Okay.
When I was looking at the A in my mind, I was thinking assets for some reason. So I was like,
Yeah.
cash in.
Equipment's not cash, so it doesn't affect cash. We're analyzing cash here, guys. I understand you're starting to think like accountants. You're saying, well, wait a minute. You didn't do the whole journal entry. You should have debited cash for 40,000. You should have debited equipment for 18,000 and credited the common stock for 58,000. What the hell's wrong with you? You're not practicing double entry bookkeeping. I understand that. Okay, but right now I'm just analyzing cash, right? And equipment's not cash? Okay. Paid cash, 1,200. If you pay cash, does your cash go down? So that's a subtract. Sold a customer frame services and collected 1,500 cash. If you collect cash, does your cash go up? Completed framing services and billed the client. If you build the client, do you have the cash yet? You don't have the cash yet, right? If you've billed them? Okay, so you take the 40 plus the 15 minus the 12. I hope that gives us 40,300. Or I've got to go back to Chabot College. Right? We're good? Okay. All right, good. Yeah, okay. That's, I think, why I skipped them in the Chapter 2 quiz, because they show up back over here. Okay, so let's go ahead. Let's do these. Let's do these two. Number 29. During 2015, its first year of operations, Nico Bakery had revenue of 60, expenses of 35, and paid dividends of 20. What is the amount of stockholders' equity? Now, when you first look at this question, it's a little bit tricky because they ask you stockholders' equity, and so you have to remind yourself what accounts constitute stockholders' equity. And the answer is retained earnings and what? Common stock. Okay, now, when you look at this question, unfortunately, they don't tell me, I don't know about it's unfortunate, but they don't tell me anything about common stock, do they? So I'm going to have to completely analyze retained earnings to be able to answer this question, right? So how do you analyze retained earnings? Okay. You're in the ballpark, but I want you to be consistent in how you answer these, okay? Beginning balance, you add what? What do we call the thing that you add to? This is a statement of retain. This is the piggy bank, guys. Huh? Say it again. Good. We add net income, don't we? And then we subtract what? We subtract dividends. Okay? So now, and then that gives us the ending balance. So now we have to make up, how do we calculate net income? On the income statement, good. And on the income statement, we report net income. And so our income statement is going to show revenue. Revenue is how much? 60,000. We're going to show expenses of how much? 35,000. They tell me are the expenses, right? Right about here. So revenue minus expenses gives me net income equals 25,000. Good. So I'm going to go ahead now, and my beginning balance is how much? first year of operations, beginning balance is 0, isn't it? Then I go ahead and I put net income into my retained earnings. I put it in my piggy bank, don't I? Have 25,000? Right, guys? And then, let's see if I can get myself a little more room here. I don't know if I can. Okay. Then what do? Subtract the dividend. The dividend was what? 20,000. When I subtract the dividend, do I get an ending balance of 5,000? And it's a credit balance because what? My net income was a credit, wasn't it? Because my revenue credits were more than my expense debits, right? And then the dividend is a debit, isn't it? It decreases retained earnings. And so I end up with a net credit balance in there, 5,000.
One more time. You said that it's a credit balance because the net income is greater than the dividends. That's why it becomes a credit.
Well, net revenues, how do you increase retained earnings? You increase retained earnings with the credit. How do you increase revenues? How do you increase revenues? Have you ever been in the water with a shark? Well, this is how it'll feel, okay? What happens, okay? So you got into the water. I'm the shark. How do you increase revenue? No, revenues increase with a credit, right? How do you increase expenses? Debit them. Okay, so when you look, we had what? Credits that increased our revenue to 60, debits that increased our expenses to 35. So net, we had what? More credits that hit the income statement than debits, didn't we? So net income is a credit, right? It's got a credit effect. And the credit effect is what? Is going to, how do you increase retained earnings? With a credit. So when we increase retained earnings, we increase our net income increases it, assuming my net income was a positive net income, right? And so it increased it, it credited it. Okay? Dividends, how do you increase those? By debiting them, so they had the opposite effect on this credit, but net, I ended up with a $5,000 credit balance, didn't I? Which one are we doing here? 29? Huh?
Yeah.
Okay, let's do the whole thing.
Is the flashlight still laughing? Is it at the end or is it in the middle?
Is what, where?
Oh, it's right here. Does anyone else want to be a part of the study group? I didn't know if everyone else wanted to.
Okay, I'm do that on your own time. Okay, all right. Okay, now, all right. So, let's go ahead and let's take a look over here. During 2015, first year of operations, Nico Bakery had revenue of 60,000. Now I'm going to assume they got cash for this revenue, right? If I receive cash for my revenue, what do I debit? Cash. I'm going to debit cash for 60,000. I got revenue, so what should I credit? I earned revenue, so I credit revenue for 60,000, don't I? Okay. Now I'm going to go ahead and I'm going to tee these up. I'm going to tee up cash. Everyone that's taking a break, you're not going to understand the next question. You're going to sit there on the next question, you're going to say to me, but what about the equipment? We debit cash 60,000. We credit revenue what? 60,000. Good. Okay. Then what happens? Then we sit here and they tell me that I have expenses of 35,000. If I have expenses of 35,000, I'm going to, how do you increase expenses? Yeah, but that's not, I did not hear a unanimous, overwhelming scream. I didn't hear a primal scream of what it is that you do to increase expense. That's what I'm looking for. Do I have to put that slide up? Do I have to put that red and blue arrow slide up? Look, if you don't learn this stuff, this debit and credit stuff, on that slide I said if you don't know this, you will not pass the class. I'm not going to put it up, but what am I looking for here? For this word file again. If you don't know this stuff, here's what's going to happen. Do you ever see Star Wars? And in Star Wars, the guy goes, oh, there was a disturbance in the forest. 50,000 people, 50 million people. There was a scream and then nothing. Oh, and Obi-Wan Kenobi heard it or something. Okay. If you don't know this stuff, I will know it. If you don't know debit and credit, I will know that I have some student that doesn't know debit and credit. I will say, oh, there's a, what is it, John? Is it an aneurysm? What is it? No. There's a disturbance in the forest. One of my students doesn't know debit and credit. Wait a minute, what student is it? And I will come to your house. And you don't want that. You need to know this debit and credit stuff, man. There is no way out. There is no compromise. There is no halfway knowing it. You are effed on the exam if you don't know this, okay? Have I made that clear? Yeah. Okay, all right. Now, don't beat me up, right? Okay, now, what happens? Expenses are 35. How do I increase an expense? Debit it. So I debit the expense. Good. 35,000. And I'm assuming that they're paying cash expenses, so I'm going to credit cash to decrease the cash because they're paying them in cash. The problem didn't tell me this. I'm just assuming it, right? It wasn't necessary to answer the question. So when I credit the cash, cash now has a balance of how much? On what planet? Debit versus credit. What's the balance? 25,000. Okay. My expenses, I just debited for 35,000. Hello? Okay, good. Now, I sit there and then they tell me that they paid a dividend of 20,000. How do I increase dividend? Good. Debit dividend. What'd they say? 20,000? Yeah. Debit dividend 20,000. Credit what? Cash 20,000 because they're paying a $20,000 dividend. Right? So I come over here. I debit dividend. How much? 20,000? And I credit cash for 20,000. What's the balance now? $5,000. Is that a 5,000 debit balance or credit balance? It is a $5,000 debit balance. Debit on the left, credit on the right. It's like a scale. You've got more debits than you do credits, don't you? 5,000 debit balance? Okay. All right, good. Now I can Now I can go ahead and I can do what? Now I can go ahead and prepare my, which statement do I prepare first? Good. I'm going to prepare my income statement. When I prepare my income statement, what goes on the income statement? Good. Net income. And net income is revenue minus expenses, isn't it? Because it says income statement. Okay, so how much revenue do I have? 60,000. How much expense do I have? 35,000. So my net income is how much? 25,000. Now I can go ahead and prepare my statement of retained earnings is the second statement. I prepare beginning balance is 0. This is my piggy bank. I put what? I put my net income into my piggy bank, 25,000, right? Every now and then I pull the plug out of the piggy bank and I take some money out. We call that a dividend, don't we? So that dividend was 20,000. So the ending balance in my retained earnings is now what? $5,000, the answer to this question. But we're trying to understand, why is it a credit here, right? That's why we're going through all this. And so now I can go ahead and I can do my closing entries. I have to close my revenue. I have to close my expense. I have to close my dividend, don't I? Okay. So what happens when I go to close my revenue? I'm going to debit revenue for 60,000 and credit income summary, right? When I credit income summary for 60,000, I go ahead and I post income summary for 60,000, right? There's that credit right there. I'm just posting it. Okay, and then I debit revenue. Revenue's now 0, which is what I wanted. I want to close it out to 0, don't I? My expenses, I want to close that to 0, right? So for my expenses, I'm going to debit income summary for 35,000 and credit what? Credit the expenses for 35,000. And when I credit the expenses for 35,000, are they 0? Which is what I wanted. And I go ahead and I debited income summary. Now income summary is showing me how much? What's the balance? Good. Balance is 25,000. Now that's my net income, isn't it? And net income is sitting there stuck in income summary. He said, help! Get me out of here. I want to go to retained earnings. So what do? I go ahead. I'm going to just write it over here. I debit income summary for 25,000. I credit retained earnings, right? For 25,000. And when I credit retained earnings for 25,000, well, let's debit income summary. When I debit income summary for 25,000, is this now 0? Is that now 0?
Yes.
It's 0, isn't it? I want to zero it out because I keep track of my income by year, don't I? Okay. And then I credit retained earnings. Let me tee up my retained earnings right here. I credit it for 25,000, right? So there's that credit. But then I have to close my dividend, don't I? So since I had debited dividend when I paid the dividend, to close it, I'm going to credit it, right? But I don't run it through income summary because dividends don't affect net income. They pull the plug out of the piggy bank and it comes straight out of the piggy bank, comes straight out of retained earnings, doesn't it? So what do? I go ahead and I debit retained earnings for, how much was the dividend? 20,000. And I credit the dividend for 20,000. When I credit dividend for 20,000, dividend is now zeroed out, isn't it? Which is what I want. Okay. And when I debit retained earnings for 20,000, it ends up with a credit balance of what? 5,000, because the credits I put in there are more than the debits, right? Okay. So I do that because notice my debits equaled my credits the whole time, right? And sometimes students get confused because I say, well, you had more debits than credits. So I thought debits had to equal the credits. They did. But the credits that I put on my income statement were more than the debits that I ended up putting on my income statement, right? Because I took all my debits and credits from my accounts and stuck them on my financial statements in the form of financial statements. And that extra credit from the income statement goes where? It ultimately goes to retained earnings, doesn't it? The debit that went to the dividend ultimately goes to retained earnings. So the credits that I put into retained earnings were more than the debits. That's how it ended up with a credit balance. Even though my debits equal my credits the whole time. Okay? Question? All right. Yes.
So if you ask for what's the amount of the cash at December 31st, that would have been a $5,000 debt.
Oh, in other words, you're saying, where's my balance sheet? Where's my balance sheet? You didn't give me the balance sheet. You're right. Because I stopped at the statement of retained earnings, didn't I? I should have kept going for the balance sheet, shouldn't have I? Okay. So, do we have any, and I'm going to go ahead and erase this. How dare I not prepare a balance sheet? You're right. Do I have any assets, sir?
Yes.
What? Retained earnings is not an asset. Never say that again. Do I have any assets? Cash is an asset. Do I have any liabilities? Do you see any liabilities over there? Do I have any stockholders' equity accounts? I have what? Where'd it go? Retained earnings of 5,000. Does the balance sheet balance? You're right. Thank you for doing that, because I would have woke up in the middle of the night and went, ah! I didn't prepare the balance sheet. Don't be scared. Okay? Okay, good. All right, let's look at this one, number 30. And at September 1st, 2015, Promise Ring reported stockholders' equity of 156. Now, in this one, we start with the beginning balance, don't we? In the stockholders' equity? Okay. Promise Ring generated revenues of 38, incurred expenses of 21, purchased equipment of 5, and paid dividends of 2,000. What is the amount of stockholders' equity? What two accounts constitute stockholders' equity? Okay, if this was a musical band, what I just heard was when I asked you to go da 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 da. Okay, what is the two accounts that constitute stockholders' equity? Good. Common stock and retained earnings are the two accounts that constitute stockholders' equity. Right? Okay. Now, do they tell me anything about common stock? Where? Show me where they say something about common stock in here. Stockholders' equity is constituted of two accounts, retained earnings, and common stock, isn't it? So they've said something about frickin' stockholders' equity, but they have not said anything to me about either of the accounts that constitute stockholders' equity. They've only told me about stockholders' equity, haven't they? Okay, but they're asking me what's the ending balance of stockholders' equity, and the only elements they give me are ones that allow me to analyze retained earnings, right? Just like the last question. They've only given me information about revenues, expenses, and dividends. I can only analyze what? Retained earnings here, right? Okay, how do you analyze retained earnings? Good. Beginning balance, I add, I subtract, I add, what do I add? Net income, what do I subtract? Dividends, good. And I then do what? Do the ending balance? Which is what they're asking me here? So did I have a beginning balance? Now they're asking me it's September 30th, so the beginning of September is September 1st, isn't it? So here they did give me a beginning balance. Beginning balance is what, 156,000? Then I have to add net income. How do I calculate net income? On my income statement. Good. Income statement, and the income statement shows what? Shows revenue. How much is my revenue? 38,000. How much are my expenses? My expenses are 21,000. So I have net income, what is that? 17,000? Net income is 17,000. Revenue minus expenses. Net income is 17,000. Did they pay any dividends? They paid a dividend of what? 2,000, so I have to subtract 2,000. So that gives me an ending balance of how much here? 171,000. And that's all I can do. I can't figure out the common stock because they told me nothing about common stock, nor did they give me any elements to figure out anything about common stock, right?
Would you be able to just subtract that, like subtract the retained earnings from that on the common stock and ask you for it?
Huh? If they asked me for the common stock here, I would have to.
Would you just subtract the retained earnings from
But I don't know what the retained earnings is. The only way I can answer this question is by pretending like just figuring out the impact that the things that affect retained earnings have on the stockholders' equity. That's the only thing I can do because they only gave me items that affect retained earnings, right?
Oh, so you like you can't really know like what the beginning balance, like what the
I don't know what the beginning balance retained earnings was, so I can't answer the question. Okay? Now, any question on this one? No question? Well, you remind me of people that say, did I say, hey, when does that happen? Like you say to somebody, hey, do you want some vegetables? Nope. Nope, I don't want any vegetables. Nope. Like, no, no, officer, no. That's how you're saying no to me. You're not saying no to me like, no, I got it. You're saying no to me like, no. Okay, you got a different number. Do you want me to start this whole question over again because you got a different number, or do you want me to ask me a question? Huh? What do you want me to do with that question? You're saying you got a different number. I don't know what to tell you. What do you want me to explain to you here? You want me to start all over again? Okay. 156,000 is the beginning balance. I added net income of 17,000. I subtracted 2,000, and if you got a different number than 171, you press the wrong number on your calculator. But I mean, if there's something about the thought process you want me to explain, I can start over again. Okay. 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 All right. When you say no like that, so why didn't the purchase of the equipment affect this? It doesn't affect stockholders' equity because what? Because it's an asset, it's not an expense, right? Okay, so maybe you did mean that note. You sure? Okay. We did these questions as part of chapter 2 questions, except we never got to this one. So we went through these. We went through the Froggy, bought this, Sebastian Bella, blah, blah. So I'm not going to repeat that. But we didn't do this last one. So I do want to do this one. I don't think we did this one, right? Okay? So they want to know what will we report as retained earnings at December 31st. How do you calculate retained earnings? How do you analyze retained earnings?
Beginning balance, add net income, subtract
Add net income, subtract dividend. Good, guys. Subtract dividend, and that gives me the ending balance? Okay, good. Do they give me a beginning balance for retained earnings? Does January 1st start a year? Huh? Good. 50,000 is the beginning balance. Now I have to add the net income, don't I? And they give me the income statement, which is revenue minus expenses. Uh-oh. This company has more what? More expenses than revenues. They have a loss, don't they? Can that happen? If that happens, my add of net income actually becomes a subtract, doesn't it? And then they made the huh? Yeah. And then they made the world's worst business decision of all time and paid a dividend in a year in which they had a loss, right? I mean, if you're a shareholder and a company pays you a dividend in a year they hold a loss, assume they're driving drunk and sell that stock, okay? So do I subtract the dividend? I subtract the dividend, 10,000, and now I'm going to have an ending balance of 34.5. Okay? You want to go to jail or you want to go home?
Is that training day?
Yes, it is. And you know who ain't got nothing on me here, okay? So what happens? Huh? That's right. Hang on, guys. I'm saying that because I'm assuming you want to go home. Okay? Jail would be going through practice midterm 1, I guess, or 2, or whatever, however I've organized them. So that means I'm not going through that, right? Right? There is a video that goes through that, which you are to watch. You're to watch that video, go through that quiz, make sure you understand everything about that quiz, about that other practice midterm, right? Hang on. You are to know the red and blue arrow slide, the chart of accounts slide. What else? The year 1, year 2 example. Thank you. The what? The quiz for chapter 2, quiz for chapter 3, quiz for chapter, a little bit quiz for chapter 1. That's supposed to be the baby finger. What was the other document? Oh, and the two practice exams. So that's how we're getting the 9 documents. That's how we're getting the 9 documents. With this being chapter 1. Don't worry about that one as much. All right, and don't forget that chapter 3, that interest stuff. Chapter 3, we had that interest slide, right? Everything else is pretty much year 1, year 2. All right, guys.